Hello, I'm Ryan Lightfoot-Brown of Fund Caliber. Today, we're joined by Kunjal Gala, manager of the Federated Hermes Global Emerging Markets Small and Mid-Cap Equity Fund, which is on Fund Caliber's Elite Radar. Kunjal, thank you very much for your time today.
Thank you very much for having us. Thank you.
Now, emerging markets have been a little bit forgotten by investors this year. How have they fared?
So you're right. To some extent, emerging markets were suffering, at the beginning of the year as the pandemic unfolded. But as we went along and a record amount of stimulus was put in globally, both in emerging market as well as developed world, emerging markets have bounced back. So just to give you some perspective, there was a record $80 billion of outflows from EM at the early part of the year. And subsequently, over the next several months, and recently, we've seen a lot of inflow in emerging markets. So interest in emerging markets has come back. EM as an asset class is up almost close to 14-15% in dollar terms this year. So there is a lot of interest, I would say, which has come back subsequent to the announcement of the vaccine, the Biden presidency win in the US, all of those kind of offering some favorable tailwinds for a recovery in emerging markets.
And while you can invest in sort of the whole global range of emerging markets, you're primarily invested in Asian companies at the moment. Why is this?
So see, Asian equities are almost 80% of the benchmark and our investable universe. Asian economies are home to close to, I would say, 3.5 billion people. It's a huge market, very deep, very broad. It's basically a stock pickers market. So any EM manager is by definition bound to be heavily exposed to Asian equities. And this is also due to the fact that Asian economies have accelerated very rapidly over the last couple of decades. And unlike the resource-intensive economies in EME and LATAM that have remained stuck in the old economy, the old world, whereas a lot of innovation, a lot of digitization, etc., has happened on the Asian side. Asian companies are also part of global tech supply chains, so they have benefited from whatever we are seeing today in the Western world as well. So a combination of all of that factors has led us to remain overweight some of the Asian economies and underweight or neutral some of the non-Asian economies. But having said that, what we are also finding is some very interesting developments on the non-Asian EM side. A lot of digitization is picking up in, for example, Latin America. Penetration of e-commerce is rising in China. So we are seeing, a few, I would say, green shoots, of recovery in some of these strategic, longer-term secular areas in non-Asian economies as well.
Well, that sort of neatly brings me on to my next question. We know that technology companies have been doing very well in the US this year, but the same has been the case in sort of China and Taiwan, hasn't it?
That is correct. Yeah. So, technology has got several aspects. So one is you have the Facebook and Google equivalents in Asia, which is Tencent, Alibaba, etc., those kind of companies. So they have been doing well even before the pandemic. Over the last several years, they have created significant amount of wealth. But there is another set of companies which are primarily located in Taiwan and Korea, and these could be either hardware companies or semiconductor companies. And they have benefited because of the rise of global tech, because these companies are part of the supply chains. And they have been benefiting not just this year because of the pandemic, but just generally because of some secular drivers like 5G, penetration of cloud computing, Internet of Things, automation, so on and so forth. So these companies have benefited quite a lot. And then you have the software and services companies in EM as well, primarily, I would say, Indian companies. And they have also benefited over the last, since 90s, because of the penetration of outsourcing, systems integration, and more recently, the shift towards software as a service models. So, all of these trends have helped these companies. So just to give you a perspective, while the US tech companies have been very strong this year, EM tech has also been very strong, up almost 50% year to date in dollar terms. So EM tech has also benefited to a large extent, given they also are exposed to similar sort of global trends.
And similar to the US, which is sort of very much driven by the big US firms, is that the same in emerging markets, or is it the smaller tech companies that have also benefited, the ones that you invest in your funds?
That's correct. Yeah. So there are larger companies, platform companies like Tencent, Alibaba, they have benefited. But equally, there is a very large number of small and mid-sized companies in the supply chain. Companies that make routers and switches, companies that make gateways for internet, companies that make cables, connectors. So you have all these, small, really nice, wonderful companies. A number of these companies are innovative. You also have large supply chain companies like TSMC, for instance. So all of that companies have benefited from the global disruption and the revolution that we've seen in terms of technology. So both companies across market cap spectrum have benefited, but it's not that all companies have benefited. Companies that are exposed to those secular themes, they are the ones who have truly kind of have outshined companies that are in legacy tech or those technologies that have become obsolete.
And perhaps looking forward now, what's your outlook for emerging markets next year? Some managers we've spoken to think it could be a good year for equities because of a weaker US dollar, and maybe some commodities picking up, which sort of drives the sector. Do you agree with that, or do you think there's going to be other drivers?
I mean, that is one view that people are taking because of the Biden administration. There is a possibility that the US dollar could weaken going forward. Biden could be very pragmatic in terms of globalization, which should benefit EM. That's one view. The second aspect is fiscal stimulus could come back this year or early next year. Japan has already announced almost $700-800 billion of stimulus. US probably could announce $1 trillion or so. So if there is another round of fiscal stimulus, that could also help the prospects for global equities, including EM equities. And then there is the whole talk about deflation coming through because of fiscal stimulus. So commodities could have a good time, and hence many emerging market economies are exposed to commodities, and they could do well. So there are all these theories floating around. We don't know for sure what is exactly going to happen in 2021, how smooth the recovery is going to be, how smooth the rollout of vaccines are going to be, and how effective those vaccines are going to be in a real world environment. And more importantly, how consistent and sustainable the recovery is going to be beyond 2021. So what we are focusing instead is, yes, we do have companies that will benefit from this short-term boost that we will see in terms of inflation or reflation or even stimulus. But we are maintaining our focus on those longer-term secular themes and structural drivers, which we think are more longer and durable in nature. Something that will last longer than 3 to 5 years. Because as our investment policy states, we are not chasing short-term cycles and short-term momentum. Rather, we would like to retain our focus on those longer-term trends, which are more durable in nature. So yes, while 2021, we may see some sort of a bounce in value, a bounce in some of the commodity names or some sort of reflation, we aren't sure that this is likely to continue over, say, the next 3 to 5 years. And hence, we stay focused on some of the longer term kind of opportunities that we are seeing right now.
Well, Kunjal, that's been really interesting and quite an optimistic outlook for 2021. So thank you very much for your time today.
Thank you very much. Thank you. Hope it was helpful.
Thank you. And if you'd like to know more about the Federated Hermes Global Emerging Markets Small and Mid-Cap Fund, please visit our website, fundcaliber.com. And for more from our content, don't forget to like and subscribe below.